Good morning, everyone, and welcome to the BVI Finance Breakfast Forum. I am Elise Donovan, the CEO of BVI Finance, and I am delighted to be your host for today's session. This morning, we are privileged to spotlight one of the most critical developments in the financial services landscape of the BVI, the establishment of the Virgin Islands Deposit Insurance Corporation. At the helm of this newly formed statutory body is the dynamic and accomplished Lisa Violet, who is our guest speaker for today. Ms. Violet brings a wealth of expertise as a chartered professional accountant, C-suite executive, and independent board director with a distinguished career spanning financial services, fintech, technology, and government-sponsored entities. Her impressive professional journey includes serving as the inaugural Chief Auditor of Varo Money, Inc., the first fintech to receive a U.S. national bank charter. She has also held leadership roles such as Chief Risk Officer at the Federal Home Loan Bank of San Francisco and Chief Auditor and VP of Business Continuity at Hitachi Vantara, and managing global teams across the United States, the United Kingdom, Poland, and Malaysia. Additionally, Lisa's experience encompasses senior governance and risk roles at Wells Fargo, MUFG, and Scotia Capital. And she began her career at PricewaterhouseCoopers, working in Canada and Chile. Her diverse background, domain expertise in bank regulation, and leadership in commercial and consumer banking uniquely positions her to lead VIDIC in its mission to enhance depositor confidence and financial stability in the British Virgin Islands. Today, we'll dive into VIDIC's mandates, its core functions, and its pivotal role in safeguarding consumer deposits and fortifying financial stability of the BVI. Ms. Violet will also shed light on the VIDC's initiatives to tackle some of the most pressing challenges faced by the BVI financial services industry. The ongoing issues surrounding correspondent banking relationships, the barriers to opening bank accounts for BVI business companies, and this forum promises to provide practical insights as well as strategic solutions relevant to our industry stakeholders. We encourage you to continue to be a part of this discussion. Of course, you can place your questions in the Q&A section, and then we'll post them to Ms. Violet. We would like to, at this time, ask Ms. Violet to open her mic. Ms. Lisa Violet, the Chief Executive Officer of the Virgin Islands Deposit Insurance Corporation, thank you for joining us at this BVI Finance Breakfast Forum. We're excited to have this discussion with you and to learn from you all about VIDIC and your plans for the future of this corporation. Ms. Violet, thank you for joining us.
Thank you, Ms. Donovan and BVI Finance for hosting this. I selfishly am going to benefit from this as well. We get to get the word out about VIDIC, but really we want this to be an exchange of ideas and solutions so that we can together continue supporting the maturity of the BVI as a destination place for international finance. And I just want to thank at the outset BVI Finance for really helping to cultivate these conversations and moving us forward. So with that, I've prepared a deck to help guide the conversation, and we will make this available to everybody afterwards. But first, want to frame what we're going to talk about today. Next slide, please. Before I start, I just want to iterate that these views are my own. They don't necessarily reflect the official comments of VIDIC. This is a normal disclaimer to give. We want to have ideas, and some of us will act on it do know that if you take any actions coming from today's conversation, it should be based on your own due diligence and expert consultation. And this is not constituting legal, financial, or regulatory advice. However, this definitely is a forum for providing information and us really having an honest conversation about the state of correspondent banking here in BVI and how things like VIDIC, which was really, as Elise said at the outset, one of the key developments in the financial sectors here in the BVI, how we play a critical role with giving stability. And that stability is how we're regarded both locally and globally. And this all helps in conversations, just like with the correspondent banking. So with that, let's go to the next slide. I'm going to give you an overview of VIDIC's role and why it's so important to underpin financial stability. Then we're going to discuss what are these challenges with correspondent banking and why does it matter? And most of all, we want to leave here today feeling empowered that there's no mountain high enough that we can't overcome, and that progress, whether it's iterative or leapfrogged, we are all trying to advance ourselves, our customers, our organizations, and overall, we want to advance BVI. So I just want everybody here on the call to know that we're all empowered to confront and overcome this situation. Okay, so let's go to what is VIDIC all about. This is a very important slide. We were enacted by the government with intention. VIDIC was actually born out of 2008 financial crisis when Iceland had a terrific run on its bank. A lot of UK citizens had deposits in Iceland and they lost their shirts. The UK said, if this could happen in Iceland, where else can it happen? And looked at all its territories, and sure enough, the question was asked, who doesn't have deposit insurance? Because that's one of the tenets of a mature and stable financial system. So this was born out of somebody else's problem that we said, let's not that happen to us. So the Insurance Act was established in 2016, and we're now in 2024, and it's just launched, and you're asked, what happened over all those years? Irma happened, and then COVID happened. But with resolve, the government of the Virgin Islands and the Ministry of Finance persevered. And we have now formally launched VIDIC. And there are two key things in this slide I want you to register. We are first and foremost on the left here for the consumer and businesses, that they know, should there be a trouble with a bank or banks, that the government of British Virgin Islands through VIDIC will make customers whole up to $100,000 per institution. This is a critical underpinning for a safety net. On the right-hand side, we are also here for the stability of the financial system in the BVI. And you will ask, well, how do you achieve that? How does deposit insurance do that? Well, first of all, deposit insurance is confidence building. It has consumers and businesses engage in your banking system, and we are on par with other mature financial systems globally. A deposit insurance organization also comes to task when there are difficulties. So we are here to work through with banks that are having problems. And sometimes you can recover the patient. Sometimes they need a little bit more tender care, and sometimes they're too far gone that there has to be some type of other exit and transition. But the key thing is here, the stability is not only from the confidence building of deposit insurance, but the different levers that we have enacted by law and regulation to work through difficulties of either a single bank or a systemic contagion. So deposit protection and stability of the financial system are two core mandates. To support that, we have to monitor the situation, both individual banks as well as the system. Also looking to the outside to see what's happening. Look at emerging risks. things that we didn't see coming that we start to notice that we take note of and start having mitigation around that. And we are not doing this alone. Through the Act, and it is mandated, we are doing a co-monitor with the Financial Services Commission. That's our prudential regulator here in the BVI. And it's a really important partnership. And we have distinct roles with shared objectives. And our shared objective is stability of the financial system of the BVI and making sure that banks continue to be safe and sound, and also the art of the possible, right? So risks are not always to avoid loss. It's also to see where opportunities are not being gained, because that in itself is a risk. So this is in a nutshell. If there's one slide, I'm going to have 3 slides today that I want you to register. This is the first one. Let's go to the next slide. I've covered a lot of these topics already, but I think the key takeaway for this page is to say that we are a statutory body, and it's important to say what we are and what we are not. We are a deposit insurance organization that's designed around the International Association of Deposit Insurance standards. So it's a global standard that our act in our procedures and policies and practices will emulate. But we are not an insurance company, and we are not a bank. Really important to know the difference there. We have member institutions, and right now they're all banks, but it's a broad definition of any organization that is licensed to take deposits will automatically be a member of VIDIC. We are collective in that. And I have a saying, people that have met me says, here's Lisa's saying again. It's by Pat Bishop. She was a cultural icon for Trinidad and Tobago. And she was in the Ministry of Tourism and Development and the Steel Band. And she had a famous saying, and I live by it. None of us have crossed until all of us have crossed, and some we have to carry. That's what it means to be in an ecosystem where you can't be on a cruise ship and be in first class and say, this Titanic is sinking, but I'm okay because I'm at the top in first class. No, we're all going to go down together. So the point of the matter is, when our neighbor is strong, we are all strong. And sometimes you have to help somebody, and sometimes you need help. And that's the key thing about why these ecosystems and these different levers are all interrelated. And right now we have 7 banks that are automatic members of VIDIC, and I want to call them by name. So we've got Banco Popular de Puerto Rico, we have Bank of Asia BVI Unlimited, CIBC, First Bank Puerto Rico, the National Bank of the Virgin Islands, Republic Bank, and VP Bank. These banks were required to become members, but I have been here 4 months, and I can say that we are very blessed to have these as members of the inaugural VIDIC, because each bank is special in their own way. Each contributes to the marketplace in their own way. And collectively, we are collecting premiums. We are a deposit insurance organization, but it's also that pooling of the fund to help our neighbor when they're having a tough time, to give us the tools and resources for absorption of losses and working out through liquidation or other levers, lesser cost to the consumer, the taxpayer. But essentially, this is our collective. At the same time, a risk that we have to call out, which is why BVI Finance wanted this call today, was to say, what can we be doing more to ensure that we have a resilient and strong and not just surviving, but thriving financial sector? Thrive, not survive. And things change over time. Customers' needs change, pain points change, commerce changes. If we find we're static, that becomes a huge risk to an individual bank as well as to the system. So deposit insurance organizations around the world, and no different here in BVI, the risk monitor of what's happening is going to be a cornerstone of what we do. And we're going to do it with the FSC, with the co-monitor. And I need to call out that very important partner. They have oversight of the financial services sector. They're also the prudential regulator. They give the licenses. They also collect a lot of data about the bank. So we don't want to have duplication of effort and put additional burden on the system and have another statutory body asking for a whole lot of things. So our commitment at VIDIC is to leverage what regulatory burden, we call it, that the FSC already has, and we're going to go far together, not alone. And we're very clear mandate as to what our individual responsibilities are. And VIDIC is the kind of new body that's coming in and making waves. But we're not going to, we're going to make waves and settle it so that we then smooth. But that's a really important partnership. And there too, we have to challenge ourselves of how we continue to adjust the sail and iteratively or in sometimes leapfrogging our methods and approaches based on new information and the changing landscape. I, for one, when Elise read out my resume, I'm like, can she hold on a job? But what I really am is helping throughout my career on transformation. And the one thing that I can say is the ones that get into trouble, whether it's an individual, organization, or collective, is when we get complacent. And the pace of innovation right now is so much that we can get left behind, or at the same time, accelerate our progress. So it depends on how we want to show up with the obstacles that are in front of us, see them as opportunities, or we just lay over and just try to what we call squeeze out whatever value we had from what we set up from before. But we want to be here for a long time. Next slide. We're going to start transitioning to what does this all mean for correspondent banking. But the key thing here is the ecosystem. And I've talked about the deposit confidence with the insurance premium of $1,000 for the checking, savings, term deposits, joint as well as trust accounts. I've talked at length about the co-monitor and the work that we're doing and the stability and the levers that we have with the deposit insurance organization to work through troubled institutions and to help prevent or have a smooth navigation of any systemic contagions. But to the left is also our fiduciary duty. We collect the premiums from the member institutions, and we have to grow that fund to absorb losses and provide necessary liquidity. We are what I call a bonsai economy. We're not massive like United States or China or the UK or even Brazil for that matter, but we are an exotic, I call it a bonsai because we have a sustainable economy that's fit for purpose just for our size. But that smallness means that we have to be really intentional about our resources, be smart, and try to leverage as much as we can, and also ensure that that bonsai continues to be strong and lasts us for hundreds of years. And it's okay for that bonsai to grow a little bigger, because there comes an inflection point where it's too small to even cover any kind of fixed cost or critical mass. So the opportunity probably is for us to do more. So let's transition to how can we do more and what challenge is in front of us right now. Next slide. Audience here is Brig. So I wanted to take the perspective of the clients, the intermediaries, the banks, the regulators, and as well, VIDIC. We're all in this together. The challenge of a customer trying to do their international transactions or just open a bank account for their business, or say an expat that has money in a couple places, or a local person who is trading overseas and just needs to have the options of moving their money. Their pain is our collective responsibility. And things have changed so much from 20 years ago. And the first and foremost is global banks, because in the past, people would have a correspondent relationship with a multinational and said, I'm good. That's called putting all your eggs in one basket, because even the big ones, the big whales, also fail. Credit Suisse, who would have imagined a world where Credit Suisse does not exist? Credit Suisse was a big resolution last year. We had a mini crisis in the United States last year with some banks that were too big, so big that they were systemic. That was Silicon Valley Bank, the engine of venture capital companies and startup companies. When they went down, there were a lot of uninsured depositors, and it had a global ripple effect. A wave in San Francisco Bay Area had reaches all the way to Japan. That's how interconnected we are. So what has happened is global banks have really de-risked. And due to many factors, but one of the leading ones is anti-money laundering and terrorist financing concerns. Just open up the paper. Recently, we had TD Bank with huge $3 billion fine, HSBC, Standard Charter, and that's just recent in the last 8 to 10 years. But you will always find that we continue to have this perennial problem. And one of the assessments of a bank, a global systemically important GSIB, globally systemic important bank, is whether they have a US violation on BSA AML and TF. And so companies have to be really thoughtful. Reputational concerns, if you're affiliated with a party that is not in high regard or vice versa, people want to de-risk reputational risk. The high operational costs of doing business and BSA AML and other things, and even for the platforms in finance, it's gotten really high. So people are trying to prioritize. Is the amount of business I'm getting from this area enough for the cost of doing business? And then there seems to be a shrinking access to clearing services. Part of this could be, we're probably going through a cycle where people are becoming protectionist or people are looking at de-risking. But what used to be the easy way of getting corresponding bank relationships, the whole dynamics have changed, not the least of which is the rise of non-banks, alternate financial services, technologies, and other regional and global solutions that have challenged the status quo. So if we're only doing correspondent banking with a status quo institution that has not kept pace with getting scale and efficiency, getting more contemporary digitization of the front office, and leapfrogging in BSA AML, which is just one thing, but an important component, then we are at risk. Last, there is the increased costs. So the impact of all of this is we kind of impede global finance for local BVI companies, for businesses that have come here. We complicate things for them because they still have to have bank accounts, right? They have to have really confidence in the posture of all our safety and soundness. And a big impact, to me, this is the most important one, is reduced financial inclusion. We've got to wake up. We have to put the customer first and their pain points, because if not, this little bonsai is going to shrink to a little leaf. We've got to have these courageous conversations. And we're not alone in this. All around the globe, folks are facing challenges. But then we look at the success stories and say, how can we learn from them? What are they doing that we can learn from? The same way we learn from other people's mistakes so it doesn't happen to us, we have to learn about other successes. So let's start talking about what could be contributors to success on this challenge. Next slide.
Lisa, before you get into that, just go back to what you said in the beginning in terms of how the premiums are established. Can you give us the formula for that?
Yes, I can give you what's public domain sharing for that.
Okay.
So what you have to look at a fund is the whole goal of the fund is to absorb losses and also to provide liquidity when there's an institution in trouble or when there's a systemic contagion. Now, to get to what that loss estimate is, it's based on a couple things. The size of your deposits in your system, because those are the losses you're looking to protect, as well as different stress scenarios of what could trigger a bank run or a bank getting into difficulty, and what are the different ways to recover or resolve that. And you have to provide liquidity as you work through those problems. So the end in mind, that's the number. But to get there, then you have to look at the participants, the members, the deposit-taking institutions, and take that end number and times a fraction to get to what the premiums are. So that strategically is what we're talking about here. The bigger the pie, the more there is to go around. So you can have with scale a thinner premium. But if it's a smaller ecosystem and we're not stretched enough, then the number is going to be a bit higher. And even with the fund itself is not enough, right? Because liquidity, think about your own household. A hurricane happens and everything is down, but you still have bills to pay. You may have the assets, but you're house rich and cash poor. So you need liquidity to get through that hump. So that liquidity number, so if this is in the VIDIC Act, so I'm not sharing private information. In the VIDIC Act, for those that are curious to read it, it's a good read. It's a well-done framework. There is a provision in there in the amendment for up to 93 million by the Ministry of Finance to provide liquidity, because we know it'll take time to build that fund from the participants in the market. And I can't share what that time frame is, but know that you need a while to build up your reserves. And so at least that's how that number has come about. And we have to preserve that capital and have safe growth of that fund and be good stewards of it for when it's needed for a rainy day.
Okay. Before you go on to your next slide, we do have a couple questions already posted. One was, how does VIDIC propose to grow the fund?
Can you say that question again, please?
How do you propose to grow the fund? You said you were going to grow the fund, but how do you propose to do that? Right.
So the premiums that we collect, we grow the fund by putting them under portfolio management. So you put your money to work. I don't have it sitting, not earning anything. And the board approves an investment strategy, and we have a service provider that has to execute against that policy. And that's how we grow the fund. And there are benchmarks as to what appropriate return is for the asset classes we have in it. But essentially, it's capital preservation, so fixed income. We're not getting into exotic securities, because that really, we need to have that fund available should we need to act on it. But the growth, in a nutshell, is from investment deployment. And each year collecting and building on that fund. But again, if we have a situation, we may deplete that fund and it has to be built back up again. And that's where that line of credit comes into play. If we have a situation that's more than the loss we can absorb from the fund, we have that liquidity line of credit, which is laid out for in the Act.
We have a number of questions, but before we delve into those, I'm going to let you continue addressing the opportunities to address some of the challenges that have been identified.
Great, and I'm glad to hear that there are questions, meetings that we're engaging here. So there are 4 things that we can consider. with this whole correspondent bank situation. And not all of them are immediate. Some of them are a long play, and some of them are relational, and some of them are quick fixes, and some of them will require investment and a new way forward. The first one is exploring banking consortiums. Remember earlier on I said, if you had that one relationship that you depended on for correspondent banking, and all of a sudden there won't be AML wars or business issues, and they get out of that business. So they just exit that market because it's no longer strategically important to them. You can mitigate that by exploring consortiums or having more than one player that you work with. And sometimes something could be said for not always going with the big guys. There are regional players that focus on medium to smaller enterprises, regions, and institutions. And they may be more hungry for the business. And a lot of them actually may be more digital first and have more contemporary approaches. And that is where the consortiums come out. I have to be careful not to give names because we want to be neutral, but it won't take long for one to know who those consortiums are, who are those new players that have filled the void where the big global players have just exited and not served the smaller markets. And then we have regional players that are well regarded, that can be used to help with correspondent banking. And lastly, like anything, managing those partners and those consortiums and always being forward-looking in the exposures is going to be very critical. The next is the technology platforms. You will find that there are players like this one. These ones I can share because it's not in competition with anybody. But there are players that serve global movement of money and global correspondent and trade finance services, as well as regular money movement payments for the consumers. We have one in our local marketplace in BVI that has that. We have 2 or 3 players actually that are able to move funds across borders. There are available players, maybe not in BVI, but outside in the Caribbean, and there are definitely global players that are hungry to serve for financial inclusion, supporting Global South and other markets. And these players are like Wise or Remitly. And again, you have to have fit for purpose for what your needs are, and you have to be very thoughtful and evaluate what problem is you're trying to solve and who's the best partner for that. But it's wonderful to...
Yeah, sorry. What I'm hearing you saying is that there are technology platforms that can leapfrog over the status quo and move us into having these relationships that we need that don't necessarily have to utilize the traditional forms of correspondent relationships.
Exactly, Elise. And that's where we could overcome where it became, before we didn't know if there was a way forward. This little thing here is all that we need. This is the computer now. If you're not innovating for the mobile phone, if you're still doing manual processes, not leveraging the insights of data, digital first application. I'm just going to throw acronyms at you because what I'm trying to wake us up is that the technologies are available. Elise opened up that I was at the first fintech in the United States to get a national bank charter. We built that bank from the ground up, built it from scratch. Digital first, cloud-based with application interfaces. And the reason why getting the charter was important because there were other fintechs serving consumers that did not get a national bank charter. It's because we're handling people's money. For a lot of people, that is all that they have. And the practices and guidelines, it is not a regulatory burden to have good practices against things that could impair the safety and soundness of an institution. It's just good business. Would you want to drive a car that doesn't have quality control, that nobody thought about the pain points of the driver, and you just jump in that car and drive? So anybody that says, this is too much, I don't want these controls, I would say, are they really looking out for you? But the thing is, the controls and compliance has to make sense, and it has to be for the consumer and the businesses and for resilience of the organization. And so I'm bringing this up because we're going to the third folder, which is strengthening compliance. Compliance is good for business. We've got to change our mindset. When you're looking at a person that's been on the business side, in the middle office, the back office, audit, risk, board member, built a bank, turned around a bank, worked at GSIPs and small regional, the whole gamut. And I have to say, the ones that embrace risk and controls as how they do business and to do right by the customer wins. The correspondent bank partners out there also, like the consumer, want confidence. We have feedback with the mutual evaluation report and the COI. Let's address the principle and the core of what they're communicating. We can get really buried in the detail, but at the heart of it, good processes and controls, good governance, good management, good boards make good companies. And everybody's stretching for more contemporary methods that can scale and are well managed. We are ensuring resilience and sustainability. But the onus is on us to revisit our frameworks, revisit our practices, push the button on the correspondent partners themselves. They too have to get better. If they have an antiquated system, for sure, they will not be able to help us. They'll only get us back into trouble. But this is where we are again, a collective. And there is an abundance of players out there that are taking this seriously and for financial inclusion and solving where incumbents have gotten complacent, there is an opportunity. And the last one is ultimately about networks of people and thought leaders and policy that institutionalizes progress for the collective. And that's regional collaborations. That's a bit of a longer play. And we could have a separate session, closed room or not, but we have to have discussion about how are trade associations really hustling. Are we doing enough on the regional front, or the international front? What sort of new alliances with non-governmental organizations are we doing? Who are the new groups? And we have the OECS, ECCU, CARICOM. Are we fully engaged? Are we getting a lot out of that? And last but not least, seeking technical assistance. We don't have to do this alone. There's so many organizations that for free will help us get technical solutions. I'm doing that as we build VIDIC. I'm trying to be tech first, building on relationships, anchoring on policy. I am not successful, VIDIC is not successful if we don't properly serve the Minister of Finance and the Ministry of Finance and our constituents, the consumer, and if we do not have accountabilities and partnership with the banks and working in tandem with the FSC. I also have to look globally to the International Association of Deposit Insurers to get input on how we can scale and do better and keep on being excellent. That is how we move forward. We're almost done here. Let's bring this home to the home stretch and we open it up to Q&A. Next slide, please. Now, to be clear, VIDIC does not negotiate correspondent bank relationships. We do not solve business problems. What we solve is consumer confidence and providing stability in the banking system so that we get an A grade by a correspondent bank that wants to revisit, expand, serve BVI, that the clearing houses and the regulatory bodies that can have very aggressive enforcement actions, that they look upon us and say they have appropriately assessed controls and risk practices, methods that are safe and sound. VIDIC is at the cornerstone of that conversation for the financial services market, but we do not solve the corresponding banking. But it's back on the industry to solve on the corresponding banking so that we can be resilient. And we have to look at the heart of all of this, which is the blue here. I cannot underscore enough. None of us matter for not serving the customer. If we don't have a customer, we do not have a business. My customers are the 30,000 people that have their deposits at deposit-taking institutions in BVI. My customer are those member institutions that are putting their premiums to absorb losses in liquidity so that if they need help, we can help them. And if they're beyond help, we have an orderly transition of things so that there's continued stability. But we are solving pain points. People on this call, the banks on the call, the trust companies on the call, what are your customers' problems? The trust companies here on the call may be saying, customer with a problem with the bank. Yes and no. You're also with your own customer. What are you doing to ensure that the customers are safe and sound, that what we're bringing into the ecosystem is sound? We all are part of this collective. So the immediate step is let's brush off and go beyond the usual suspects and find out the inventory of corresponding banks that are out there. And we now know there's a range of them. And let's start exploring digital solutions. It will help us leapfrog both in front office and efficacy and effectiveness of our middle and back offices. If you're not embracing technology, you're not going to be relevant. Collaborative efforts, we talked about that. And then lastly, smaller jurisdictions have overcome. It's no secret, Singapore continues to marvel the world. They're even heading into crypto and no one's batting an eye. They're small like we are. They came and there was nothing on that island, and look at it now. Even their garbage they recycle to cover the pavement on the road. What are they doing? Let's learn from Asia what they're doing here. Let's look to America. America is a leader in giving feedback on how to do better, the regulatory and the innovation that's there. We have, not far from us, places to look. And the UK has jurisdictions, they're the entryway to Europe. We are under them as a territory. There are so many success stories. Within the Caribbean, it is known that Barbados, small as it is, has overcome. What are they doing? Let's learn from them. Lastly, places that we never thought would be a player have come up and risen to the top. And I'm talking about places like Brazil. Look at Nubank. Nubank was nowhere 8 years ago. They're now the 4th largest bank, global payments. What are they doing? Digital first, solving pay points, consumer first. With that, the last slide.
Well, before we get into that, let's delve in because we're running.
Yeah, this is the last slide.
So
Thank you and Q&A.
Let's address some of the pain points that our listening audience have identified. And the first question is, let's assume I have a deposit account in the British Virgin Islands. If the bank is forced to suspend its services due to an extraordinary situation and fails to pay out the balance in my account, would you cover the full amount of my deposit under any deposit protection scheme or similar arrangement, or would only a partial payment be possible?
Great question. So the coverage is clear. It's 100,000 per institution for a deposit taker. So it's up to that. That's the insured deposit. Remember, I talked about the resolution side of our mandate. That's the orderly working out and transition. And a lot of times when in a market a bank goes bad, what happens and is systemic, there is another party that takes over the business, the good assets are sold, there is receivership, there's liquidation, there's also just a transition of the business. There is a period there where first and foremost, your insured deposits are covered. And then we look at orderly resolution, and you're still exposed if you're uninsured. But depending on the type of resolution that's found, you can have an orderly transition.
How long is that process in terms? You said you have 100,000 coverage per
7 days.
institution, and
7 days.
if that institution goes into liquidation, for example, how long would that individual or that depositor be able to access their 100,000?
7 days is 7 days is the commitment, and that's international standard right now. IODI is looking at having it be, and it's going off for comment soon, to have it sooner than 7 days. And we right now are starting at 7 and would be looking to have it sooner than that, but we're starting off with 7.
And just for clarity's sake, so that 100,000 is just per institution. So you mentioned 7 banks. So you can have 100,000 in each one of those 7 banks and it would be covered.
Yes, it's per institution. So you technically can have up to 700,000 coverage.
Okay.
Okay.
Let me move on to the next question. How much are the annual costs of the VIDIC organization? That is, how much of the premiums go towards running the VIDIC organization on an annual basis?
Yes.
Trying to get into your business.
Zero. When I met all the banks, that was the first question. What's our premium level and who's paying for your office? I'm making sure the office is small and that we scale. But we have, and it's in the act, so this is full disclosure, we have an initial investment of $4 million from the Ministry of Finance for our operating costs. And my commitment is for us to be efficient. That we have a certain run rate per year. So we'll have to figure out in a few years, how do we sustain the running of our operations? And right now, we have runway for a few years from that initial investment. And we definitely segregated the premium fund from our operating fund.
Okay, I think you answered the next question, so I'm just going to move on. It was asking about where would you invest the premiums? How does the BVI think about expanding connectivity with US banks that are able to service the BVI and provide solutions to pain points mentioned?
First part of that question was could you just repeat the first half of the question?
I think it's how does VIDIC think about expanding connectivity with US banks that are able to service the BVI and provide solutions to the pain points mentioned?
Right. So to be clear, we do not negotiate corresponding bank relationships, right? What we do is we offer consumer confidence and stability in the financial system so that we are well regarded by correspondent banks that have to make an assessment of the territory in our banking system. We're doing our job if we really help impact the positive regard of BVI's financial system. So that is how we will do it, and getting the word out of VIDIC and through things that happen, demonstrating that we can work things out if there's a problem in the financial services market. But essentially, it's us carrying out our mandate and institutionally and systemically, statutorily, providing the levers that we have to ensure stability and orderly resolution of problems for the BVI. And that you have, so the banks have to promote VIDIC. They have to understand what VIDIC is about for their own chances of bringing down the risk profile of their bank, of the BVI, by these global players that have to make an assessment. So that is how we contribute to it.
The next question is on what is the average deposit account balance in the BVI for individual accounts?
Who is ever asking these questions, please follow up with me after you totally get it. And if it's more than one person asking the question, I am very impressed. So that 100,000 just didn't come out of the sky. There were consultants and data, all the banks provided their data, and there was a commitment to get the majority of consumers covered, right? You don't want a coverage level that's so high that only the top actuaries of society are made whole. And you want it whereby you get good coverage of the average consumer and small business. And that's where the 100,000 comes about. It's a reflection of us getting to more than 90% of covering the everyday consumer. If that everyday consumer's balance changes to a different number, we will have to revisit it, and it'd be good if it went up to a higher limit level. Jamaica just recently increased their coverage because the average balances had moved. Now they have inflation, other factors that can go into why things have gone up, or just a net new, more business activity. But that 100,000 basically covers the majority of the everyday consumer that they're made whole.
Lisa, can you give us a number? The person asking the question is saying it seems significantly larger than other similar schemes in the region. So does that signify that we have a larger average deposit?
Yes, it does. I mean, BVI is, I pinch myself that I'm here. I mean, this is heaven, right? I mean, right now, everybody for Thanksgiving weekend, US is out there in catamarans. This is wealthy country. I have not seen any poor person here. I'm coming from the United States. So there's affluence here. Where the average is a certain amount. And yeah, that's where the average balance comes from. And we are pegged to the US dollar. Don't forget that, since 1967. There are other economies where, for instance, Trinidad, I don't know what the exchange rate now, if it's still 6-1. And then Jamaica's currency, it's a huge foreign exchange exposure to the US dollar. So those are the two factors. The average per capita income and deposit balance also being pegged to the US dollar. We don't have that high level that comes from foreign exchange exposure. Very good questions.
Lisa, I'm sorry, before I go on, you're saying the average deposit is higher. But did you use the average deposit or did you use per capita income? Because the per capita income is skewed to the higher than to the average.
Yeah, I was trying to explain why BVI is more affluent than other regions in the Caribbean. It was not used as the basis to calculate. The basis to calculate what the premium coverage should be was first and foremost the average deposit in the accounts, and that we get a level that should there be a problem, over 90% of consumers will have their deposits insured.
Okay, excellent. We can move on. The service provider to manage the fund portfolio management, is that a local provider or foreign provider? I did hear the full fund will concentrate on capital preservation rather than sexy assets.
Yes. Please, people, I'm serious when I say reach out to me that are asking these questions. You all can come on the roadshow as we spread the word. And we have to give a report of our operations every year. June of every year so we just started. So June of next year, we will be providing a public report of everything that we do, our mandate, level of deposits, our successes, areas of opportunity, as well as our stewardship over that fund. This is a public forum, but what I can say is we have been very intentional about ensuring that we work with firms that have global standards of controls and governance that perform well. So, and that we can, where possible, try and will be committed to working with local providers so that they too can continue to build their capacity and regard. Even on the staffing, I'm an expat. I made a commitment to the board that I should hopefully be out of a job in 3 years because there will be a bench of talent that can succeed me and that we build up local capacity. And when we don't have local capacity, we get the learnings from elsewhere and also leverage that. So I'm not evading the question, but what I will say, if you're hearing me carefully, we have a high standard and it's high global standard. Everyone who's interacted with me knows that I'm a real stickler for detail and excellence, and that I'm happy to report we have both here in the BVI.
Ms. Violet mentioned that she wishes the BVI to be a destination place for international finance. Yet, most of the banks in the BVI will not touch international clients. Those international clients that do bank in the BVI have more than 100K, so the insurance cover is not a significant factor for them. Yet the banks have to pay a percentage fee for those uncovered deposits, which will be passed on to the customer one way or the other. So VIDIC's costs will actually drive international business away from the BVI, since the insurance premium is larger than the margin that the bank presently makes on those deposits. That's a big
Wow.
one.
That is a loaded question, and it does require a more lengthy response, but I'll say this, and first and foremost, having a deposit insurance regime is table stakes for a financial services place. If you're a business and you're questioning that BVI should or should not have a deposit insurance regime, means that we don't want global standards. We don't want to ensure that the average consumer, where over 90% of the retail customer, that's deposits, right? A bank does its business by taking in deposits and lending it and doing payments flow and other things, right? The liability is the deposit. If 90% of your deposits are going to be coming from the everyday consumer, you have to make them whole. So I would say it's a courageous question. It's a good challenge, but I would challenge back. It's a normal table stake. If 20, 30, 40, 50 bips cannot be absorbed to have a more mature market, then the bank has to ask, what are we doing? Where can we find ancillary business? Are we challenging ourselves to do more as a business? Because the rise of non-banks and intermediaries and fintech players is because our banks doing the full opportunity. And as for the businesses that are in excess of the 100,000, VIDIC, first and foremost, in any deposit insurance is for the individual consumer, and individual consumer being there is resilience. And the businesses have choice, and they're going to be in a viable, maturing financial market where the cost of those premiums are less than the benefit that you get from scaling your business by having good regard because you have it, that we're resilient and we can challenge ourselves for revisiting our strategic businesses and how much the banks are doing and for whom.
Okay. So Lisa, two questions arising from that point. Is there a difference between commercial accounts and individual personal accounts as far as VIDIC is concerned?
Yeah, it's the deposit holders and it's up to 100,000 for savings, checking. So it's both, but up to 100,000. And the trust account and a joint account also could be, limited type of arrangement. But yeah, it's 100,000 across the board for the deposit holder.
Okay. So it doesn't matter whether it's a personal or a commercial account. I guess the next question would be, alluding to what the person alluded to in this sense. A lot of the companies that are established in the BVI, they want an account to do transactions, but the deposits are not necessarily in the BVI. But they do need an account to do their international transactions, and they have problems doing international transactions, but it's not necessarily that they want to put the deposits. As far as we know, most of the deposits of the BVI companies are not here. And that's one of the things we say, the money is not here, it's somewhere else. But you do need an account to do your various transactions.
This is where it comes back to what does it take to open an account? What is the friction to open it up? How do you de-risk so that the banks are open to having that account? And it comes back again, a real call to action is strengthening the compliance posture. So we remove those barriers and looking at digitizing. I have to say this, if we digitize the front office more, we can scale more, and we don't look at a premium for deposit insurance as it costs, but one of the levers as well to kind of help with a maturing marketplace. We have things to do at all pockets for resilience and relevance. And the payments part of it, there will be a certain amount that you still need to bring through, even though the money is elsewhere for like your base operations and activity of coverage, you still need an account. The pushback or the call to action is banks figure out how to transform your controls and BSA posture to make that assessment. The collective good controls, good hygiene is good business, is good for the customer. And by, what seemed before to be a problem is no longer a problem. Again, I call out markets where they're small, they have some of the same contagion headwinds, but they figured it out. What are they doing? Appetite, investment in compliance and controls, smart scaling, and listening to the customer, what the customer needs, and no matter what the challenges are ahead of us, and I'll end with this, no matter what the challenges are ahead of us, it is our individual and collective responsibility overcome those challenges so that we can serve the consumer and we can continue to have a vibrant and thriving BVI financial system.
Okay. You're responsible for three things you said: deposit protection, risk monitoring, and stability of the financial system. Someone is asking about audited financial accounts. Will they be published on your website?
Of VIDIC?
For the banks, for the banks.
Audit of the banks.
Yes.
But the audit of the banks, some of the banks that are in our system are part of global banks. And you can just go on the website or Google and you can find them. And we are not here to publish the audited statements of the individual banks. We will publish our audited statements of VIDIC. But the answer is no, we are not going to be posting the audited statements of banks. But a lot of them already have that information available in their investor relations tab of their website or of their parent company's website. Public disclosure is there.
There's a question regarding are other businesses required to join VIDIC? For example, I guess some of your investment or pension management schemes.
I don't understand the question. Sorry, pension. Can you repeat the question, please?
I guess the answer would be no, because you're just dealing with banks. You're not dealing with investment funds.
Yeah, but let me hear the question though.
Okay. On VIDIC's website, there are logos for the traditional / mainstream banks. Are other businesses required to join VIDIC, for example, MWM and PMI?
Great. So everybody look at the slide in front of us right now. You see those X's? It says what we are not, right? We do not cover investments. We're here to cover deposits. Deposits are banks' obligations to the consumer who's put their money in there. And we do not financing and money service businesses, and names of two companies were called out. They are not deposit taking, right? That's very clear. An investment is not a deposit taking. And we have to be very clear about what we're not, and they're not licensed to be doing deposits. Now, if a player with that alternate license does things that look and smell like deposit taking, that's where the supervision, the risk monitoring keeps an eye on these things. And sometimes, and we've seen this in other markets, those players that seem to be doing or getting into things that banks traditionally did, and it gets to a certain critical mass and size, sometimes it's a signal that there are pain points not being addressed by the incumbents, that they're creating this risk and this alternate, what I call path, where water has to find its natural balance. Other times, it's an organization that's totally getting into areas that it's not supposed to, and we have to have a strong prudential regulator, risk monitoring posture to find that out and have a cease and desist on it, because it introduces problems.
What about credit unions?
That's a really good point. And we just get started. We will evaluate every year who we should further extend this to. We just got started, so we have to start somewhere. What I have seen in other markets is the deposit insurer, after it gets settled in, does open up to credit unions and other community development financial institutions. So the answer is yes, possibly. Not today, but maybe sooner. I mean, at some time in our future.
Okay. I'll move on to the next question. How can the regulators and government assist the banks with correspondent banking? Special independent audits, oversight guarantees, and other guarantees. The correspondent banks are more interested in volume and how much profit can be made. I feel we need a country approach to this problem.
There are different ways to approach it, right? I think from a marketplace perspective, there are enough players available globally and regionally that properly serve medium to small markets and enterprises. Okay, so that's market solution number one. VIDIC and FSC are not in the business of creating business relationships. We are statutory and prudential oversight by the FSC, and we are the deposit insurer. But what we do is provide financial resilience and de-risking so that the correspondent banks or entities can make a risk-adjusted favorable assessment of the BVI in our system. That's the role that we play. With respect to underwriting and grants and guarantees and say, let the government write a check, that's a policy matter that I will not get into. But no amount of policy in writing a check gets us out of challenging ourselves as to whether or not our office, our practices, our controls, our approaches are contemporary, and whether they are customer first or not. Because you cannot put a guarantee on something that's maybe still needing to evolve in terms of whether it's fit for purpose. So all these are options, and it's quite okay to have a point of view that it should be something that's national. I have no comment on that, but my comment will be, we will continue to expect de-risking. We would continue to expect banks that are relevant to the needs of the marketplace, and we will continue to foster an environment where businesses and individuals come here and choose and continue to choose BVI, because we're doing all the things of self-reflection, maturing ourselves in different avenues. And if the day should come where something is systemically existential, and we need another approach. And I'll just give you an example. There are some sovereigns that will do, say, a line of credit with a development bank, not for this particular problem, but for others. But what I'm trying to introduce is the more that we do now to strengthen and mature our industry and approaches, the more we open up for choices and at appropriate costs to the taxpayer ultimately.
I'm going to repurpose the next question. They're asking essentially about the risk level of our current banks. So can you speak generally about the risk level, or is it a question that is still being assessed?
Well, we do not make public what assessments are. FSC does not publish, nor should they. No system in the world publishes scorecards of the institutions. That would be detrimental to stability and confidence. But players have continued to be here, and all of us are always working through things that we could do better at. Some need to work better at things than others. But again, we come back to helping, giving specific feedback as to what needs to improve through our co-monitor and the FSC's regular examinations, and us looking at emerging risk and getting ahead of it. We'll continue to look at things that, from a deposit insurance organization perspective, we care about capital levels, liquidity, and operational resiliency, right? And systemic risk, or things that may not seem systemic, but the failure or downfall of this one thing then becomes a contagion. So to answer your question, it's a bonsai. We have an appropriately sized market. There's always opportunity to do more. There can be overlap in some areas, gaps in others. We have a well-resourced and committed FSC. I've been on your side, on the business side, and have suffered with what I call regulatory burden. But I'm a convert now that I've gone on to the other side, and I have accountabilities as CEO of VIDIC. And because I have been, I think, on the business side, when I say that risk and controls and compliance actually helps us all, I really mean it. I really, really do. And if I have set up my controls to be bureaucratic and not really identifying or solving the problem, then I got to transform that. And look at us all on this call, the level of the questions. I'm already encouraged that we're asking the right questions, and we are committed to doing what we need to do to resolve this issue and continue to make this place resilient.
We have a question. Does a deposit insurance scheme not encourage banks to operate a much higher risk level, knowing that there's an insurance?
Yeah, that's called moral hazard. I really need to get the names of the people that are asking these questions.
Well, they did put moral hazard in bracket.
Oh, they did?
Yes.
Yeah. So moral hazard comes about, yes, where an organization, a bank, a deposit taker may not be committed to the controls and their viability because they're getting covered anyway. That's where the co-monitor is very important. And this is where the normal, regular reviews of the FSC, both their periodic full exams and their table topic, their regular ongoing reviews matter. This is where our co-monitor that we're establishing, we just hired a data analyst. We're hiring on our team to kind of look at this idiosyncratic and keep a monitor on that. But it's a fair question. That's why the co-monitor and FSC exist. And this is where us being close to the member institutions and how they're doing is going to be how we identify and mitigate any type of moral hazard.
Are there penalties, additional penalties built in to VIDIC's now being a co-monitoring? We know FSC has their penalty system, is there an additional penalty built in for non-compliance with the Deposit Insurance Corporation?
Well, the first and foremost penalty is if you're a member and we're about to put all the decals up at the banks. If you're not upholding your controls and commitments, we will take the decal down and you will not be a member until you resolve those issues. The regular safety and soundness feedback from the FSC, we will keep an eye on it. If they give directives, is the bank following through to address those directives or making substantial and intentional progress? So we'll work through with that. Penalties per se, that's not what we do. We either have the decal up or down. You either can provide insurance or you cannot, right? And the other thing is, if there were an issue with a bank and we had to take a loss, then this is disclosure in the Act. So always go back to the Act. It says in there in black and white that we can assess fees either to the individual institution that got into trouble. We have orders for liquidation stuff. We have priority of the flow of funds to cover losses. And we also, and this has been done in other markets, in the United States, for instance, after the 2008 crisis, and also last year in 2023, they did a special assessment for the larger banks that could absorb it and that had scale. And so that's public domain to see what different jurisdictions do. And in other cases, you settle on liquidation if it goes to that. And you can assess special premiums to that individual institution or the collective. Again, the key message is there are different levers, there are different approaches. The Act gives us flexibility to do what's appropriate for the situation at hand.
Violet, throughout this whole process, Lisa, this Violet, you've talked about, I guess, non-traditional means, and this next question talks about is there protection for, I guess, fiat currency versus virtual assets? Is that a consideration or something that is non-traditional that you would consider in terms of your coverage?
So, savings account, checking accounts, term deposits, trust accounts, and joint, that's what we cover right now. We are not looking at covering digital assets right now. United States doesn't cover digital assets right now, but other jurisdictions do. Put it back to this call today. If we're still trying to get our arms around correspondent banking, we are not ready to be looking at digital assets. So I really am asking everybody collectively to solve this correspondent banking problem, because there's opportunities out there and de-risking that we have to be prepared for. I didn't call out it, but it was in the slides. For instance, there's blockchain solutions, infrastructure side, not blockchain for digital asset, but blockchain infrastructure that is available for kind of really agreement, very paper-based kind of controls, because blockchain can do a lot of work in assessing these things. That's why I'm saying our transformation in our front office, digitizing the front office, and our RegTech or compliance posture in our control back and middle office. And yes, if you want to consider digital assets in sometime in the future, let's look after our core table stakes so that we could be in a position to looking at the art of the possible. But today, no.
Okay. We had a question earlier. I don't know if you have a number of correspondent banking banking relationships. Do you have a number?
Anybody on the call that wants to put it in the chat that knows the number of correspondent banks? I know of a couple here on island, and but I don't want to quote.
Okay. Okay, so we'll get that information later. It is agreed that a deposit insurance scheme is required for international standards, but let's face it, the FSC confirms that the BVI banks are overcapitalized. The main risks for customers are from two banks alone, no names mentioned. To gain international business, BVI banks have to provide competitive rates where margins are very thin, less than 20 BP, that is the insurance premium. So international business will go elsewhere where much of it already is.
This is not an FSC or VIDIC problem. This is a product market fit problem. We have to be relevant to the consumer. Can we go back to that prior slide, please? Align actions to customer success, needs, and pain points. We cannot blame a deposit insurance premium on the woes of, are we doing what's right for the customer, and our approach is contemporary and solving customers' problems. If we have a correspondent bank issue, what do we need to do to de-risk that so that we can take that friction away so that businesses can open accounts, consumers continue to transact here, and that we have access to global trade and financial systems? Let's please not call out one or two banks. A courageous comment and question by the person that raised it. But I come back to, this is a collective, and today it's one company or companies, tomorrow it's another. Look at any market. Everybody has their turn in having a tough time and needing to recover and get to the other side. But this is structural, and this is us always continuing to be relevant and challenging ourselves in our approaches. And FSC, I could speak to this because I am here. There is not anything that says banks are well capitalized and we have too much capital. What FSC will say is that we have a safe and sound system and whether banks have met their capital requirements or not. And your business profile can change to increase what capital buffer or liquidity coverage ratios you need to have in place, or you can de-risk your business so that you have a lot of head cover and runway. But again, I have to say, status quo, with all the changes around us, that in itself is a risk. And let's not get too comforted in a point in time and say it's two banks and 20 bips and we're overcapitalized. We are all of us having to do a reset, a kind of navel gazing of reconfirming who is our customer, how are we serving them, and that we all show up with our distinct perspectives and roles in the marketplace and contribute to that collective. And if a bank is in trouble, there are mechanisms in place to identify and deal with them. Are we perfect? I keep coming back to United States. They had tremendous issues last year in 2023 with 3 bank failures. One of them was a digital asset intermediary. It was a regular bank that got into new business. Another one was with systemic exposure of uninsured deposits that was at such a scale that when it got onto social media, it took off like wildfire. And then the third one just got into collateral damage. And let's look at Switzerland with Credit Suisse and UBS. And let's look at the Global South and Brazil. It's very easy for us to point fingers, particularly in a smaller economy, and try to call people out. I will not go there. And this is where I'm putting my neck out a little bit of seeing the culture of VIDIC and what we represent. We represent stability for all. We represent challenging ourselves to always do better and with integrity. And we are not doing any blame game. We are here to serve and raise everybody up.
Yes, I'll come back to that. We are kind of running out of time, but there are some questions that I think maybe you can address. What about law firms taking deposits in escrow accounts or accepting money to hold in trust for long periods? Can this look and smell like a deposit taken, especially when this sometimes results in refunding or paying going forward?
Right. So if that law firm has an account with one of the 7 banks, it's part of the deposit. It's deposit, its escrow deposits are sitting at a bank here. If the deposits are not here and it's offshore, then it's not part of the deposit insurance regime. And more likely than not, correct me if I'm wrong, but that law firm would have an account here with one of the banks. And if they're doing it elsewhere, it's outside. And if it's outside and something happens and it becomes systemic and it's uninsured deposits, well, that's not even defined as a deposit. So it depends, the definition. Again, FSC has a way of enforcing and evaluating the licenses. And if it's with one of the 7 institutions, then it is part of the system and covered.
I guess someone is referring back to the previous answer. Banking institutions are risk rated around the world, that is through S&P, Fitch, and other rating agencies. Why would the BVI, VIDIC, not share real banking risk for consumers so that we know which banks are good and which banks? I think you answered that already, but.
And let me address that. It's and be very specific. S&P and Fitch is to assess an entity for access to capital markets, whether it's bonds or income bonds. It's also for other lines of credit. It's not necessarily an individual bank. So individual banks have that assessment for their own capital markets activity. That is not the same as assessing a bank from a safety and soundness regulatory side. Those same banks in their local markets, the regulator, so for instance, the United States, you've got the Federal Reserve, the Office of the Comptroller, and the FDIC. Their assessment of that same bank is private. It's called CAMELS, and it is not for public domain. And it's quite possible to have an investment grade bank for capital markets, fixed income issue purposes, and have matter requiring attention or a cease and desist order with your local regulator. So let's not confuse the two. And if a bank here locally or their parent gets a rating agency, we have that to look at, and that will help inform the assessment of the bank from a safety and soundness perspective, but it does not replace it. And we will never, FSC or VIDIC or any other regulatory prudential regulator, disclose the areas of attention and safety and soundness and consumer compliance ratings because it will introduce instability. Rating agencies of Fitch and S&P is not the same as safety and soundness consumer compliance assessment of a financial institution by the prudential regulator.
I think we're running out of time. This has been a very informative discussion, to say the least. We've heard from you what your mandate is and how you intend to assist us. And I think particularly our audience is very keen on opening bank accounts, correspondent banking relationships, and you have a number of advice, a number of proposals on how we can address those issues as a collective. One of the things you emphasized is that, we have to do this together as a jurisdiction, as a country. With that said, I'm going to let you wrap up and say whatever that's left to be said in terms of deposit insurance. And I think it's important for us to assess where we are in terms of our relationships with our banks, relationships with our correspondent banking institutions, and then how we can improve as a jurisdiction. For me, I think one of the biggest impediments to, I guess, the growth over the last decade has been the inability or the hesitancy for us to have access to viable bank accounts. We've heard it locally, and we've heard it from our customers and clients internationally. And I think it's incumbent on us here in this jurisdiction. We are providing services and products that we ought to be able to provide one of the most important accompaniments of those products, which is a bank account, so that you can do your international business. There are new ways of solving this problem without going through the traditional means, as Ms. Violet has outlined to us. And I think it's also important for us to understand what those are and how we can avail ourselves of these new opportunities and leapfrog into the technology and bypassing some of the traditional systems that are not necessarily working to our benefit. With that, I'm going to ask Lisa to do a wrap up.
Elise, thank you, BVI Finance, for this very important conversation today. I was really happy to see the engaged questions. I would like a copy of all 31. We want to thoughtfully respond through BVI if there are any left unanswered. But I want to end with this. BVI is a very special place. I every morning give a ride to somebody, and the gentleman who rode with me today, he was from Guyana. And I asked, what do you like best about the BVI? He says, I like how peaceful it is here. There comes a stage in your life where you just want peace. And I said, is there any one thing? And he said, I also like how there's many different people here. It's so cosmopolitan. I said, there's one thing you had to change. What would it be? And he talked about particular policy that was impacting expats. People who had been here from elsewhere who were not belongers. And he said it was always there, but they weren't really helping with it. But then finally, there's action around it. He said, but the thing I would ask to change here is that we continue to think about everybody. And he was talking from the perspective of somebody who's not a belonger, but has been here 20 years. I have only been here for 4 months, and the place has already gotten a hold of me. There's just something unique, and I really do have this visual of a bonsai. Our whole world is cratering over excess. Like, how much is enough? But what I have to say in closing is that a strong economy and financial system means that we have enough for the caring and feeding of a sustainable economy that merits the best, and BVI merits the best. We have some structural issues and maybe some complacency issues with respect to product market fit and relevance that we have to address the elephant in the room, because we have to unlock this so that we can continue to be resilient, and that we have people asking about the art of the possible versus this is a cost and it's not worth it anymore. We have immediate, medium-term, and long-term things to do to deal with the corresponding banking issue. And it has to start with strategy and a commitment, and then doing what it will take to overcome this. And there's always a solution. And the last part, if something becomes so important that we have to continue to evolve policy, the VIDIC Act in itself is a policy. And I have to say, this jurisdiction, BVI, is committed to global standards. It's committed to excellence. And like any family, There's always somebody that's not doing their part for the time being. But then they will come about. And I just want to say, let's continue to build the reputation that we have here. Let's deal with the issues that we have and overcome them. And let's have a revisit of this conversation, say 18 months, because it probably will take about 18 months to truly get payments across my back to where it should be here in the BVI. And let's look back and see how we've done.
Thank you very much. This has been another BVI Finance Breakfast Forum. We have been talking with Ms. Lisa Violet. She's the Chief Executive Officer of the Virgin Islands Deposit Insurance Scheme. And we understand that they're responsible for deposit protection, risk monitoring, and the stability of the financial system here in the British Virgin Islands. I will end with one thing that Lisa has said to us, and we must all be mindful of. None of us have crossed until all of us have crossed, and some of us will have to carry. And with that, thank you all for joining us, and do have a pleasant day.